I'd like to say good evening to everyone and to thank you and welcome to All the Ways to Use NC 529 Funds. My name is Soretta Broadway and I am the 919 CFNC Regional Representative. My colleagues tonight who are joining me and who will be presenting as well. We've divided it up into three parts. We don't want you to get too bored tonight listening to one voice. So when I'm done, I'm going to turn the baton over to my colleague, Ms. Tamika Ruffin, who is the 704 Regional Representative for the College Foundation of North Carolina. And then she will turn that baton over to my other colleague, Ms. Tequila Hall, who is the 336 CFNC Regional Representative. Again, welcome to All the Ways to Use NC 529 Funds. I know that this is a very exciting time of the year. Many of you may have college students who are about to leave home and leave the nest and turn the chapter. So I know you probably have a plethora of questions tonight. And if that's not your situation, if that's not where you are right now, you're probably very excited and eager to hear about all the different ways that you'll be able to use your 529 funds. So we're excited about explaining that to you. Please do excuse us if we tell you some things that you already know, because there will be some persons on the line who don't know a lot about the 529 plan, maybe thinking about opening up an account or what have you. So we're going to talk about what a 529 plan is. What is it? We're going to talk about how the 529 plan works. We're also going to talk about what are all the ways that you can actually use these monies that you're saving. And then we're going to have the frequently asked questions about the NC 529. So let's talk about what is a 529 plan. Let's talk about that number 529. That refers to the section of the Internal Revenue Code that's creating these programs. So the federal government law allows states to develop qualified tuition programs with wonderful tax advantages to help families with saving for college. So the 529 enables participants to qualify for federal tax benefits, and North Carolinians have a benefit that where they can actually qualify for the state tax benefits. Our North Carolina 529 plan is authorized by the North Carolina General Assembly. It was authorized, shall I say, back in 1996, but it is established and maintained by the North Carolina State Education Assistance Authority, and College Foundation Incorporated administers the program for the state of North Carolina. The General Assembly established the Parental Savings Trust Fund, of which the authority is trustee, to hold all the assets of the program, but assets are not the property of the state. North Carolina's 529 plan. Let's talk about some of the characteristics of it. It's open to residents of any state, direct enrollment through College Foundation Incorporated, which means there are no fees or sales charges for enrolling. It's very accessible, seamless, I would say, affordable, tax-free earnings on the contributions, very flexible, and comprehensive for someone that does not consider themselves to be a savvy investor. So let's now talk about in detail, how do 529 plans work? So glad you asked. How do they work? I mentioned the fact when I was discussing the characteristics of North Carolina's 529 plan that it's very accessible, because any adult, as I've already stated, can open an account to help anyone who plans to go to college, regardless of the relationship of the beneficiary's age. For example, and most commonly, we have parents who may want to open for a newborn, a grandparent for a grandchild, or a neighbor for a friend. Even an individual can open up an account for him or herself. It's affordable. There is no enrollment fee. Isn't that great? No enrollment fee. One can enroll in the program for as little as a $25 contribution. This program has very low total annual asset-based fees and expenses, which range from 0.25% to 0.39%. There are no extra fees that we're going to, hit you with unless you make a request for some special services, such as courier delivery, receiving paper communication instead of electronic. So if you want to receive your statement in the mail rather than going online and being able to review it, there will be an extra fee for that, or any outgoing wires. Also, you can contribute. You have total control to contribute when, on occasion or regularly, and how, if you want to make a lump sum contribution versus an automatic draft, when you want. Speaking of lump sum contributions, you can make your contributions by personal check. You can have it electronically drafted through your EFT draft, or funds transferred to the account from your account. You can also send in a money order, transfer or rollover also, maybe from another 529 account in which you have. Also, you may have a Coverdell Education Savings Account or a qualified savings bond. You just want to find out what is the fee for transferring. You want to find that out prior to. Automatic contributions. So you can have recurring account drafts where monies can be drafted through your check-in account, for example, once or twice per month, and you can select the date in which you want these monies to be drafted from your account. Also, for someone whose employer is offering this as an employee benefit through payroll deduction, of course, the employer has to be set up with the NC 529 plan in order to transmit employee contributions. The employee must have a payroll deduction authorization agreement on file with the NC 529 plan. Let's talk about some tax-free earnings. Account earnings are free from federal and North Carolina income taxes when the monies are used to pay for qualified higher education expenses. Out-of-state residents pay no federal income taxes on account earnings used for qualified educational expenses. However, you should check with a tax advisor regarding the state taxes. Very flexible. Savings may be used for the beneficiary's college costs at virtually any college, any eligible college, anywhere. You can change future contributions anytime. You can reallocate your funds that you have saved twice each calendar year. You can also, this is a wonderful addition to our program that was done a couple of years ago. You can use the monies to pay back loans. So student loan repayments can be done with the monies. And we're going to talk about this in a little bit more detail, all of these things that I'm talking about very briefly. And you can use the monies for apprenticeships as well, which will be talked about in more detail as we go along. I am now going to turn this mic over to my colleague, Miss Tamika Ruffin. Thank you.
Thank you, Soretta. So you've learned a little bit about exactly what are what the 529 plan is and how flexible it can be. But now we'll talk about all the different ways that you can use it and why people actually decide to save in a 529 account. There are actually 6 qualified ways, so we're going to talk about those. One of the first ways that you can use one is for K-12 education. So this is kind of a newer one, so a lot of people may not know about it, but you can also use it for K-12 funds. And we'll go on to the next one so that you can see the different ways. So in December of 2017, there was a bill that was passed that allowed families to not only save for college for 529 funds, but also to save for K-12 tuition. So whether or not it's elementary, middle, or high school, although any funds that you put in an NC 529 fund, you can withdraw. That is a qualified withdrawal to use it for tuition. And I do want to make sure that I'm saying tuition because it is just for tuition. I know that there may be other fees that are associated if they're at a private high school, middle school, elementary school, but you can withdraw the funds for tuition purposes only. And up to $10,000 per calendar year per beneficiary. The other thing that you can use them for, so you know that you can use them, we're talking about K through 12, this is probably the most common way that you can use 529 funds, and that's of course for colleges. So that's for a trade school, a community college, a four-year public or private institution, whether or not it's undergraduate and or graduate school. When you're using it for college, we talked about with K through 12 that the funds can be used for tuition purposes only at a private, elementary, middle, or high school. For college, though, if you're saving, if you're going to use the funds for college purposes, you can use it for tuition, you can use it for books, you can use it for fees, for room and meals, and also computer and related technology expenses. So those are the qualified expenses that currently students can withdraw the money for that have put money into an NC 529 account. Another one that may also come up for certain students, there may be some of your students that may have, or for yourself, that you may have some minor learning differences. You may need some special equipment. There are ways to be able to withdraw those funds for those purposes as well. It is kind of on a case-by-case basis. So what we normally tell people, if you do need special equipment, if you do have special needs while you're students in college, to definitely contact our call center, which we will put up at the end, so that if you have questions or concerns about kind of special needs equipment, that can possibly be a withdrawal for that as well. For other students, though, and this is something that has come about a couple of years ago, is that they do understand that there are some technical needs that students who may have disabilities, or students, again, that have minor kind of learning differences may have some different expenses than other students have. So in North Carolina, we have the 529 account, which is what you're familiar with and what we're talking about now. But the North Carolina Treasurer's Office also created the NC 529A account, which stands for the ABLE account. And that's for students, it's specifically for students that have disabilities. So the NC 529 account is kind of administered or governed by College Foundation and the State Education Assistance Authority. The NC ABLE is actually kind of covered under the Treasurer's Office. And it's allowing students to be able to cover additional expenses. So maybe there may be some special equipment that they need, but also maybe some expenses that they have to have covered that may not be covered under Medicaid. And so if a student does have those kind of different situations, they are able to get a 529A. So they are two separate things. So if you have a student again, that has some type of disability, there's the NC 529A, and then we have the NC 529. The other part of it is that you will want to know that, let's say, for instance, that your student may not, when you first started the 529 account, there weren't really any kind of special needs equipment that you were aware that they were going to need. But then as time went along, maybe your student does now need some type of special needs equipment or need some other expenses because of some of the differences they may have. One of the things that you can do is you can switch over to a 529A account with no penalty. So again, let's say you started out with a 529 account, but now you want to switch it over to a 529A account, you are able to do that with no penalty. Rollovers are limited to $15,000 per calendar year if you decide to do that. And if we can go back to that last slide, to Tequila, just so we can see some, because I want you to be able to see where to go. To the website is nc.savewithable.com. So again, for the particular NC 529A account, it does have a different website, and so you would need to go to nc.savewithable.com. And so we talked about the ways that you can use the funds that you save for. It can be for K through 12 tuition, for college expenses. But one of the other things that my colleague Soretta had alluded to is that you can also use 529 funds now for student loan repayment and apprenticeship programs. And we are excited about that, because we've had lots of participants that ask us about this for many years. As part of the Secure Act in December of 2019, there were some kind of provisions that were added on to the 529 account, and one of those is for student loan repayments. And so you can withdraw up to $10,000, that's a lifetime maximum, to repay student loans. So there are different situations and scenarios in which this could happen. One of the things that Soretta had mentioned at the beginning is that you can save for yourself, you can save for your student, but let's say that the student that you are saving for, you didn't use all the funds in there for them, but you have maybe a child that was older, you didn't save for them, but they have the student loans that they want to repay. You can withdraw money for a sibling of a student that you initially were saving for. You can also do it for yourself. So one of the things that I think Ms. Broadway had mentioned at the very beginning is that you are able to change your beneficiary. So initially, maybe you set it up to have it where it would be for a particular child or student. Maybe they got a scholarship and they didn't need that money, and you want to change yourself as the beneficiary because you're thinking, my parents didn't save for me and I have some student loans I would love to use this money for. You can then change yourself as the beneficiary and you can repay student loans, again, up to a $10,000 lifetime maximum. So that's kind of a great addition that's been added on to that. And again, we do encourage people, though, if you do decide to use that, just know they don't allow you to sort of double dip. So when it's time for you to do your taxes, if a student or if you have student loans, normally you're able to take advantage of a student loan kind of interest deduction. However, you can't use both of them. So if you withdraw funds in that year to repay a student loan, you cannot also take advantage of the student loan interest reduction that you're able to during tax time. We always tell people to be sure that you check with their tax advisor just to be sure that you are clear on how this works. But we're excited about this addition, and we know lots of people have found it to be beneficial as well. Another part of the Secure Act that they passed was not just with student loan repayment, was also with apprenticeship programs. This is kind of like a reemerged word. We have kind of heard a lot about internships and fellowships, but then there's also apprenticeship programs. And this is kind of where a student would get kind of hands-on work experience while they are kind of course, working a job or learning about a particular job, but they're getting hands-on experience. Sometimes those experiences, though, may involve them having to pay for fees or books or supplies or things like that. You can also withdraw funds to pay for any kind of expenses that are associated with an apprenticeship program. Now, there are lots of different programs that students can have an apprenticeship for. There are companies that can create apprenticeship programs if they like to do that. In order to be able to withdraw 529 funds in order to cover expenses associated with that, it does have to be a registered program. So there's actually a website that the government has that has all kind of registered apprenticeship programs. So the website that's up here is apprenticeship.gov. If you go to that website, you'll be able to see all of the kind of currently registered apprenticeship programs. It does have to be registered. It'll also let you know if the student does come across an opportunity where they can have an apprenticeship with a certain company or someone, and they would like to know how they can register their apprenticeship program. It does give information about that as well. But this is, again, another addition that can come along that possibly your student can, again, use the funds for that as well. And at this time, I want to turn it over to my colleague, Ms. Tequila Hall. She's going to talk to you about, so we kind of talked to you about how you can use it. We talked about kind of what a 529 is. And Tequila's going to talk a little bit more now about where do you actually put the money. One of the biggest questions that we get, right, is, so I start this 529 account, where does the money go? Where is it? And so Tequila's going to talk a little bit more about our investment options and how the different places where you can put our funds. So Tequila.
Thank you, Tamika. So let's talk a little bit about investment options that are out there. All right. So I want to talk a little bit about the plan being comprehensive, which is one of the features or characteristics of the NC 529. So you need to make sure you're selecting investment options that meet your objectives. So what are your goals? And we also want to keep in mind that we're looking at the time remaining until your beneficiary will need the money for school, okay? And last but certainly not least, you think about what your risk tolerance is. So we have, many people who have different investment styles. So we have some people who might be a little bit more aggressive with their investing. Some people might be moderate or in the middle, and some people might be very conservative. So you want to keep those things in mind as you think about investments. Now, another thing is you don't have to put all your eggs in one basket. You can diversify your portfolio. So you can mix and match if there are several different investments that you're interested in. So the first one I want to talk about is the Federally Insured Deposit Account, and this is offered to you by State Employees Credit Union. I always like to start by saying that it's available for members who are part of the State Employees Credit Union as well as non-members. So you don't have to be a member in order to participate. But one of the things that this particular investment option seeks to do is to provide income plus protection of principal. And the way this is done is through the Federal Deposit Insurance. Now, as we talked about different types of investments, now this particular investment option is, pretty much conservative. Now, the other thing I want to say is the principal contributed and the interest earned is guaranteed, and that's guaranteed by the State Employee Credit Union. It's also insured by the National Credit Union Administration. This is the only guaranteed option that's available. Now, there are a few others I want to mention in the time that we have together. So I want to talk to you about some Vanguard age-based investment options. There are 3 different ones. And you want to choose the risk track that fits your risk tolerance. So again, we talked about the different types of risk that you might have. But again, you want to select one that works best for you. You also want to look at, the age of your beneficiary. And that's going to determine the placement within whatever track that you decide that you want to use. So again, the 3 different tracks that Vanguard makes available would be the aggressive track, we have the moderate track, as well as the conservative track. Now here you'll see all the different Vanguard age-based investment options. So your beneficiary could be a newborn all the way up to 19 plus years of age. So let's say that you have a child that's between newborn and 4, and you're more aggressive in your investments. So if we look at the aggressive track, we're looking at the Vanguard Aggressive Growth Portfolio. So that would be 100% stock. We can also go over and look at the moderate track, and we're looking at the Vanguard Stock Bond Portfolio. So 87.5% stock and 12.5% bond. Now, if you're thinking that you want to be more conservative in your investing, we can look at the Vanguard Stock Bond Portfolio. So that's 62.5% stock and 37.5% bond. So this is just an example that you can look at, but I encourage you to look at the chart based upon the individual that you want to save for. So we're going to move right along, and you can see how we can, again, look at, someone as early as newborn, like I said, all the way to 19 and older. So I'll do one more example for you. So let's say that you have a beneficiary that might be 13 to 14. So they might be at the end of middle school or just starting high school. If we look at the aggressive track here, we're looking at the Vanguard Moderate Growth Portfolio. So you see here there's a 50-50 split, so 50% stock and 50% bond. We can then look at the moderate track, so the Vanguard Conservative Growth Portfolio, 25% stock, 75% bond, and then the conservative track. Here we're looking at the Vanguard Income Portfolio, so 75% bond and 25% short-term reserves. Now, there's some amazing age-based products that Vanguard has. Now, as you take a look at the individual portfolios, you may say, well, you know what, I really like some of the things that I saw in the age-based product, and you want to do it just individually. And you can certainly look at any of the 9 or 10 that we have listed here, and again, mix and match. You don't have to have all your eggs in one basket. So you'll see all the different portfolios that I mentioned as part of the age-based product. So you'll see here we have the Vanguard Growth Portfolio. This one seeks to provide growth of capital and low to moderate income. You might decide that you want to utilize the Vanguard Income Portfolio. It seeks current income. There are a few more, and just for sake of time, I won't go over all the different options that we have, but we do have everything on our website, as well as the program description that you'll find there. And here, there's just a few more that you could choose from. So 4 additional ones you might want to take a look at. And again, think about what your investment strategy is. So what are you trying to do? What are your goals? Now, one of the things that we cannot do during this presentation is we cannot advise you. So we cannot tell you which investment options to choose. So we do recommend that if you have questions, you're not able to make an individual decision, that you talk to a financial advisor or a fee-only planner. Now, here's some of the frequently asked questions that we have about the NC 529 plan. So as my colleague mentioned to you, anyone can contribute. So you might be a parent, grandparent, aunt, uncle, friend of the family. It could be your godparent. You can even use this account to save for yourself if you would like to attend college. Annual contributions, the maximum total allowable is $500,000. So this is adjusted each year. And of course, we look at least 4 years of undergraduate studies and maybe 2 years of graduate school. Now, I want you to keep in mind too that this is a national program. So although I always say this in a presentation, we have great schools in North Carolina, but as a national program, it can be used at any accredited college or university in the country. So again, my colleague said 2-year, 4-year, public, private, in-state or out-of-state. Now, we've mentioned the term participant or account owner. So, when we talk about who has control of the account, it's whoever has established the account. So that participant is the owner. So what we always say is that once the student reaches the age of majority or maturity, they can't just take those funds and use it however they want. So if you're the participant, you're in control of the account. The age of beneficiary for contributions, that's any age. We talked about tax-exempt qualified withdrawals. So again, as long as the money is used for qualified educational expenses. And we talked about tuition, fees, room and board, books, supplies, other equipment. There are no federal or North Carolina income taxes. So I just want to make sure that you're aware of that. And timing of withdrawals is whenever the beneficiary is ready to go to college. And there are no income restriction or AGI limits. Now, I know it's a lot for you to absorb, and you're trying to figure out, well, how much money should I save? Or how much will college cost? We have a wonderful calculator that's here to help you with projected costs. So you're able to put in your beneficiaries' information so we know maybe what grade they're in or how old they are. You can indicate what type of college you want to save for. So again, are we looking at, a public school? Are we looking at a private school? Is this an in-state or out-of-state school? How much do you want to save? If you put in that information, we can tell you exactly how much you will have. If you want to see how much you should save in order to save for all expenses, you can also use the calculator in that manner. But again, I want you to understand that this might just be a piece of the pie or a piece of the puzzle. And we don't know if your student will get scholarships or grants in the future, but you do want to make sure that you're planning ahead and you have some money set aside. Now, you're also welcome to, share the wealth. You don't have to do all the saving on your own. So if you have family members or friends, godparents, grandparents who want to help you on this journey of saving for education, then we do have some amazing gift cards on our website. So it could be a birthday, it could be Christmas, graduation, or whatever, and they can send money in care of the NC 529 account that you've established. Now, other frequently asked questions we have is, how does the FAFSA application affect your aid? Or, so we might get that question from time to time. So, of course, I do want to let you know when you're putting information on the FAFSA form, this is considered to be a parental asset. So when we talk about the calculation, it's not weighed as heavy in the calculation. Of course, it could be treated differently depending on who is the owner of the account. So a lot of times we have parents who might be the owners of the account, but sometimes we may, actually have, grandparents who own the account, or depending on the situation, it could be, even a student who owns their own account. So anyone 18 or older can establish an account. So I just want to make sure that we keep that in mind. So if we look at how it affects, financial aid or how it's viewed on the FAFSA form, so if it's owned by the student or parents, it reduces the need-based aid by a maximum of 5.64% of the total asset value. It could be an independent student who saved for college. So, of course, it does reduce the need-based aid by a maximum of 20% of the total asset value. And if it's owned by grandparents or someone else, it's not counted as an asset on the FAFSA, but withdrawals are counted as untaxed income the following year for the FAFSA, and it could reduce need-based aid by 50% of the withdrawal amount. Now, I know that you're learning a lot about 529s tonight, and there's so much we could talk about. So we want to make sure that you stay in the know. We want you to know what's going on with the NC 529 account, not just tonight, but also going forward. So we encourage you to sign up for our NC 529 newsletter. So you can actually use the link below, and don't forget you will get a copy of the presentation after the session is over. So we do ask that you give us a few days to get everything in line and to have that emailed over to you. But you can sign up for our newsletter so that you don't miss out on anything that's related to NC 529. Now, of course, upcoming webinars, we have the one that we're talking about tonight. So I do want to let you know, of course, all the ways to use 529 funds. That was our upcoming event for today. But if you want to learn about other events that we have, you can always visit us at cfnc.org/events. So cfnc.org/events. You can always see what upcoming events that we have. So we have many different presentations that are planned, not only related to the NC 529, but also related to just career and college readiness. Now, as we talk about online access, you can go to nc529.org or cfnc.org/nc529. And you can learn about enrollment. Enrollment is easy. It doesn't take a lot of time. We do encourage you to enroll electronically. It is the most efficient way to set up your account. By creating a username and password on our website, not only are you able to enroll into the NC529 plan, but all your account information can be accessed that way, account maintenance forms that you may need as we prepare for you to utilize the funds that you saved. FAQs are frequently asked questions, so we went over a few this evening, but there are many questions that you might have, and we want to make sure that you know everything you need to know to make an informative decision about creating an account. And then we've already talked about the savings calculator. Now, we do have representatives available to answer any of your questions Monday through Thursday, 8 to 8. And Friday, we do have regular business hours. So during the week, Monday through Thursday, we have people hours. But on Fridays, we have traditional hours, so 8 a.m. until 5 p.m. And you'll see our toll-free number here, 800-600-3453. Or if you are local, 919-828-4904. Now, investing, for the future is really easy. It's easier than you might think. And so we encourage you to consider starting enrollment today. So we want to make sure that we have plenty of time to address any questions that you might have. And so my colleagues and I will be looking at the chat. But just to remind you, again, online, you can go to nc529.org. You can also visit cfnc.org/nc529. If you would prefer to email us with your questions, you can also email us at savings@cfnc.org. And again, our toll-free numbers are listed here. Don't forget to connect with us. So if you're social media savvy, you want to follow us on Facebook. We're also on Twitter if you tweet. We're on Instagram as well as YouTube. So I'm going to pause here so that we can see what questions that we have. So I see that we may have some questions or comments in the chat, and I'm going to invite my colleagues to help with that. So are there any questions that we see that we need to address this evening?
I do see one on here. Someone asked, can they start a fund without naming the beneficiary? And I will go ahead and answer that. You do need to have a beneficiary named, even if it's yourself, because you can always switch it to that child's name or to someone else's name, but you do have to have a beneficiary when you first start it up. I know sometimes that's a question, especially if you're doing it for someone who may be pregnant at the time and they don't have a name yet, but you want to start when you can start at the time and just put that person, or that person can be the beneficiary until they do choose a beneficiary. And I'll go ahead and send other questions to my colleagues. And one of the questions said, can you enroll online? And I'll let one of them answer that.
Yes, you absolutely can enroll online, and we highly encourage you to do that. As Ms. Hall stated, you can go to cfnc.org/NC529. and you'll be able to access our online information and go to forms, documents, and you'll be able to upload. You'll be able to, you can fax it, scan it, and email it in or what have you, but you can complete your enrollment online. You absolutely can.
And another question, okay, go ahead.
Well, I know earlier there was a question in regards to if you wanted to have the monies drafted, if you wanted to go through your employer, you would need the employer profile number in order to put on your enrollment application so that they would be able to know who your employee is, because every company that's offering the 529 plan as an employee benefit is assigned a profile number, in which that number will be given to you to put on your application, so they'll know how to identify which company you're with and how much you want actually to be drafted through your payroll, which is, as we stated earlier, a minimum of $25 would need to be drafted in order for you to be able to participate in the payroll deduction.
And I'll say this too with payroll. If you find that your employer does not have it as a payroll deduction option, absolutely check with your human resources. It's very easy for them to add it on as an employee option, so that if you want it to come directly out of your check each pay period, they would have to be signed up with us just to say that they are an employer that is offering it as an employee benefit. Again, very easy, not a lot of work for them to do on their part. So if your employer is not enrolled, it's very easy to just check with your human resources and encourage them to contact us so that they can become, so that you can do payroll deduction.
Absolutely.
I think another question that we had, in what situations can siblings of the beneficiary use the funds, or do you need to change the beneficiary? And Tequila, I don't know if you want to take that one. I'm trying to give everybody equal love on the questions, all right?
Okay, so you can have siblings to utilize the funds because, it could be that your child decides that they're not ready to go to college or they don't want to go to college. So before I answer your question, let me say this, is that, as a participant, you don't have to rush to change your beneficiary because sometimes we do have young adults who are not sure, that they're ready to go to college or they want to take a gap year or whatever. So you can leave that money in the account and see if their mind changes. But if they don't, want to go to college or decide not to go to college, you can roll it over to another beneficiary. And so it could be another sibling, for example. And so you can do that anytime. You could also name yourself as participant beneficiary. So if you wanted to go to college, you can use it for yourself. And just to kind of expound on that just a little bit more, let's say that you were saved for a student and that student hasn't even used all the money. Maybe they used some of it, but they didn't use all the money that was saved for undergraduate studies. If they decide to go to graduate school, you could use it for that.
And while we're talking about that, Tequila, another question came in about siblings, since we're talking about siblings right now. Just to clarify, would it be best for someone to have multiple accounts or just create one saving account if they have multiple children?
Okay, great. So really the way 529s are set up is that you do need to have an account per beneficiary. So it's not designed for you to save for all your children in one account. So you do want to have individual accounts. So for example, if you have 2 or if you have 3 children, you want an account for each one. But just know that if you don't use all the money for one, you can roll those funds over to another child that you have.
Great. And someone asked next, can you put cash on, or is everything electronic?
Okay. You can send monies in by personal check, money order, or you can have it electronically drafted through your checking account or what have you. So it can be, but of course we don't want you to send cash in or what have you. But always remember, any contribution that is made, it has to be a minimum of $25 or we will return it back. So that is the minimum contribution that you must make at all times. Of course, you can send a lump sum, as we stated earlier, but if you are not going to send your monies in electronically, by all means, send a personal check or a money order to satisfy your contribution.
Wonderful. Another question that we had is, can you reimburse yourself? Let's say you pay for your child's tuition out of pocket and now you want to reimburse yourself. Can you do that without any tax consequences? Or do payments need to be issued from the 529 account directly to the university? And I guess I can answer this one since we're here and we're rotating. I'll say, so one of the things you can do is you can reimburse yourself as long as you're paying for tuition. So say once you have paid for it, you can do that. We definitely do several webinars as it gets a little bit closer about qualified and non-qualified withdrawals and the time limit in order to do that. So typically we would like for people to kind of do, I think it's in 14 days now or maybe a little bit longer now, to be able to put a request in to reimburse yourself. So you could pay for it out of pocket and reimburse yourself. We do ask you though to keep any kind of paperwork just in case, just like with any funding, there may be an audit that's done where you have to kind of show proof that you use those funds to reimburse yourself for tuition expenses for that particular child. But you can also, of course, have it directly. Something that's new coming around the pipe, which we're still working on, is having those funds directly transferred to a college or university. But yes, you can reimburse yourself if you are using it for any of those qualified expenses that we mentioned before. And let's see. Someone else asked a question about, is autism considered a disability when looking at a 529A account? I don't know if anyone wants to ask that. We don't directly administer the 529A account. So one of the things I will say is for kind of detailed questions, we definitely recommend that you contact NC Able, because they would be able to kind of ask you more questions and give you the kind of the idea of whether or not it falls with under the 529A rules. So I would definitely visit the website. We do have a link to it on the Save area. You can contact us through the North Carolina Treasurer's Office. You can go there. Remember, we had the website that you could go to as well to kind of go there. But we would recommend that you talk to someone directly in that 529A area because there's different questions they may want to ask you about that. Someone else asked a question, are contributions tax-free to or just before withdrawal? So our contributions tax-free, I'm trying to make sure I'm reading, our contributions tax-free or just withdrawals? I got you. Are contributions tax-free or just withdrawals?
Contributions that you're making to the 529 account are after-tax dollars. They're not post-tax, they're after-tax dollars. And I do believe, is that what is being asked?
I think that's what's being asked. Are contributions tax-free or just withdrawal? So just withdrawal. So what you're saying is that, yes, that's what you're saying, Soretta, but withdrawals are tax-free. The earnings on the withdrawals are tax-free as long as they're used for any of the qualified areas that we talked about. So contributions are already after-tax contributions. And then any withdrawals, any of the earnings on those withdrawals are tax-free as long as they're used for educational expenses that we talked about.
Are there any other questions that we see in the chat?
Yes. Someone else asked, what if all the funds aren't used? What is the process of withdrawing funds and what are the consequences?
Okay. So if you're not using the funds for the purposes in which they're intended, it would be treated as a non-qualified withdrawal. So the answer is yes, you can make the withdrawal. And so we have the appropriate forms for you to do that. And then, of course, because it is not a qualified withdrawal, then, of course, you would have to pay the federal and state taxes and then a 10% penalty, whatever the rate is at that time. So the only way that you get you can avoid, having to pay the federal and state taxes on what it's earned as well as, the penalty is if it's used for qualified educational expenses. Because the reason that 529 accounts are established is, for educational expenses.
Someone asked, is there going to be is there an upcoming info session on qualified and non-qualified withdrawals? We typically we do have some coming up. We like to do them around the time that bills are due at colleges when people would be using them. So we do have one coming up later on this year, but we also have a recording of our last one. So if you need to know, if you want to get all of that information about qualified or non-qualified withdrawals, you can go to our YouTube channel. And there is, under the 529, that we have a YouTube channel, NC 529, and we have our last recorded webinar that we did about that topic, but we will have another live one coming up towards the end of this semester.
Yes, and I think that recording is entitled NC 529 Rules. So it goes over lots of great information about qualified versus non-qualified and all the rules that surround that. And so I think we'll have one in the fall and another one this spring.
And we have one other question. Oh, sorry, did you have something you wanted to say?
No, go ahead. I was going to address that question, but go ahead.
I'll read it, and then you can absolutely address it. It says, again, thank you all for the presentation. Thank you for joining, Cheryl. One of the questions she had, can you clarify about NC 529 funds and how they're viewed when students complete the FAFSA or the Common App or whatever financial forms they would have to use for a college?
Well, I'm going to speak on the FAFSA. The 529 plan funds may be considered an asset. It's a parental asset, by the way, and it is considered an investment on the FAFSA form. It will be asked in the parent section and in the student section. It will ask, do you have a 529 plan? If the 529 plan is owned by the students or parents, it reduces the need-based maximum by 5.64%. If it's owned by the independent student, it reduces non-base aid by a maximum of 20 of the total asset value. And if the 529 is owned by grandparents or others, it may reduce need-based aid by 50% of the withdrawal amount. But it is considered a parental asset, and it does not weigh as heavily against one, for lack of a better word or term, because it is a parental asset and it's not a student asset. But it is considered financial aid, of course, and the reason for the monies being saved is to assist with paying for college. So it is asked on the application, and that is the calculations that the financial aid offices will be using in order to determine how much of the monies will be considered financial aid per academic year. And all of this information is in our program description that you will be able to find online at the links that we've given. And of course, if you have additional questions, we'll be able to assist you with that after you've had a chance to look at the program description. But I see here you're also asking about the common application for a rising 2022 college freshman. I cannot speak on the common application, but I do know that question is asked on the FAFSA form. I will convert with my colleagues in regards to the common application if perhaps they know a little bit more about if that question is on that application.
So we know that that's good, and that's a really good answer, Ms. Broadway. It's not on the common application because that's kind of the application procedure to actually apply to the school, but it is sometimes asked on the CSS profile, which is sometimes another financial form that some colleges use. So they do ask you about it, which is why one of the reasons why it's so good that she kind of broke down those percentages as far as how it affects from 5% of need to 20% to 50%. That's why it's good with 529 plans that they are owned by someone and the student is just the beneficiary of it. So they are not putting it in as their asset, whoever owns it, which is typically that parent. If it's a parent, you are the owner of it. But there are different rules, and so if you are someone for yourself that's saving for yourself to go to college, you are the beneficiary, obviously, and so the percentages will definitely change as far as how it may affect it. It shouldn't be a discouragement, though, to save for college because your whole goal is, again, to do this with the least amount of debt. So if there is an opportunity for you to be able to pay out of pocket, to put money aside and earn a little bit of interest on that money for college, that cannot be beat. So we encourage you to do that, but definitely contact the financial aid office if you have questions about it. But it's very clear on the FAFSA as far as whose information they would like when it comes to that. But that was a good answer.
Great.
Yeah, I see we have some, because we do have a financial aid person on the call, and she said, yes, always call your friendly financial aid officer if you have a question. Someone just messaged me, so they're always welcome to help.
Okay. All right. Do we see any additional questions in the chat?
We don't see any additional questions. No more questions, I see.
Okay. Well, I do want to remind you that if there are any questions after this evening, again, we have an amazing call center that you can contact. And again, like I said, we have those extended hours throughout the week, Monday through Thursday. On Friday, just know that we open at 8 a.m. and we close at 5 p.m. And then, of course, you can also email your questions again, savings@cfnc.org. And if there are no other questions, I just want to make sure we're good with questions. If there are no other questions, we just want to thank you guys so much for joining us this evening. We hope that you will join us for future webinars. And like we mentioned to you before we ended, is that we're going to have some more to help you figure out how to use the money that you saved. So just be on the lookout by visiting our cfnc.org/events page to find out upcoming webinars that we have, not only on 529, but everything you need to know to be career and college ready. Enjoy your evening.
Bye, everyone.
Bye.